Stocks not small gains, but the market bread turns positive as mid-caps join in. Autos and consumer durables lead gains. IT and FMCG drag.
The stocks of Westside and Zudio owner Trent takes a knock after it misses its growth guidance by a wide margin. The sharp deceleration in growth over the past few quarters worries investors.
LG Electronics 11,600 crore rupee IPO hits the street after marquee investors plow in nearly 3,500 crore rupees as anchors. The company is betting on higher penetration and premiumization to drive growth.
IndusInd Bank CEO Rajiv Anand says he has a 4-point agenda, topping which is rebuilding trust. He also aims to get back the business momentum, build a profitable yet balanced franchise, and unlock productivity with fintech. He promises IndusInd will be a substantially better bank in 3 years. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be a session where we are extremely quiet in terms of the indices today. So just about consolidating, you would have to say, with a little bit of a positive bias. So we have the Nifty, which is just about hovering at around 25,000. And we have the mid-cap index, which is up around 0.3%. What stands out is that the advanced decline ratio is all tad bit on the negative side. So we have around 1343 stocks advancing to 1458 stocks declining on the National Stock Exchange. So let's see whether that crisscross takes place or not. A lot of stocks in focus on the back of Q1 updates, and one of them, primarily Mangalam, would definitely be Trent.
Yep, we will most definitely be discussing that. But meanwhile, a lot of these pharmaceutical names also not particularly bad. Device Labs is up. The top Nifty gainer right now, up around 3%. We're also seeing some traction on Eicher Motors, which has moved higher. Eternal continues to do well, has put in about 5% in the month of October so far in terms of gains. And for all these food delivery players, quick commerce players, this is a good time. The stretch of this year, which starts from, say, Navratri, goes all the way up until the start of the new year or the end of December. It's good demand period for them. It's festive season. It's a lot of ordering activity that takes place as well. IGL is the other one. A lot of these, oil and gas names are also doing fairly well in today's trading session. IGL has spiked, and alongside that, we are seeing some traction in Vodafone Idea as well. Yesterday was under pressure. The case, which was supposed to be heard on the 6th, has been deferred to the 13th right now. So after the initial unwinding that has taken place out there, the street's building in some positions on Vodafone Idea. But a lot of these second quarter updates that you spoke about, Ekta, Metropolis tops that list. Higher after the company's reported, a near 23% growth?
Well, yes. Metropolis is in focus after, it reported its Q2 update. So what they have reported is around a 23% year-on-year consolidated growth in Q2. This is led by a strong performance in their preventive health, which is their True Health segment, as well as the wellness offerings. Growth came in despite a lower incidence of seasonal illnesses such as dengue as well as malaria. Core diagnostics, which is basically one of their key arms, improved to a high single-digit margin from a break-even in Q4 of FY25. Scientific pathology as well as their arm in Dehradun continue to outperform the company's average margins according to them. The EBITDA margins remain strong at a consolidated level. True Health Wellness and the specialty segment grew 25% and 36% year-on-year respectively. B2C grew 16%, B2B has grown around 34% for them, and the company has said that they remain debt-free and they have a net cash surplus of around 55 odd crores. They've also acquired Ambika Pathology in Kolhapur to establish a mini reference lab in Western Maharashtra. So they're undergoing a significant amount of expansion, and that's Metropolis for you. That stock is just about holding with a gain of around 2% at this point in time. But we do have a whole list of buzzing stocks which are in focus now. Vivek is here to take us through all what's buzzing around in trade today. Vivek, over to you.
Well, thank you so much for that. Quite a few stocks or names we don't discuss too often today, making all the moves on reasonably good volumes as well. First on the list is J&K India. This particular stock, remember, yesterday was perched at the upper circuit almost 10% higher. A large order win from its parent is something that has ensured that the stock is higher even in today's trading session. The entire auto pack today is seeing a bit of a bounce back. The top names, look at Maruti, M&M, Eicher Motors, even a Bajaj Auto for that matter, today has recovered from the recent lows. RHI Magnesita, after a long time, we're discussing this particular name. The top NSE 500 gainer higher by almost 13% on very good volumes. And DOMS Industries, again, this particular name on good volumes today, one of the top gainers in the broader end of the market. And look at PB Fintech. This particular stock has been a significant underperformer in the recent past. But today, in the F&O pack, it's seen a smart rebound. And another name where you saw a large block deal, which is Shaili Engineering Plastic. That particular stock higher by 13%. On the other hand, a few misses as well, or a few negative movers as well. Trent, of course, we discussed it earlier, down 2%. Tata Investment Corp, very volatile moves in this particular name today, down by 6%. And GMDC, which has seen a stellar rally today, seeing a bit of profit booking come about, down over 3%.
Okay, all right. All right, Vivek, thanks very much for that. So those are a lot of the buzzing stocks in focus. We'll take a short break, but on the other side, we'll be talking to the management of J&K Bank to discuss their Q2 business update. Stay tuned.
Welcome back. You're watching us here on Halftime Report. The market holding up fairly in the green right now. Let's talk about a couple of these updates that have come in from the BFSI space. Amitav Chatterjee, who's the MD and CEO of J&K Bank, joins us to discuss three key focal points. Obviously, loan growth pickup going forward. Given the second quarter, the loan growth was a little below their guidance. Their margin expansions, outlook on that in the second half, and asset quality. Will that continue to strengthen? Thanks a lot, Mr. Amitav, for joining in and giving us your time here on CNBC TV18. The obvious question is 12% loan growth guidance that you have given. The second quarter, you've done slightly below 9%. Are you sanguine on meeting this guidance given the offtake that you're witnessing in the second half of this year? Or do you believe that there is room for you to scale down that guidance from 12% to say something like in 10, 11 or 10%?
Good afternoon. Thank you very much for having me here. Yes, absolutely very certain about meeting the guidance. If you look at the improvement that has happened from quarter one to quarter two, I had mentioned during quarter one that I was more hopeful of having a better credit growth numbers in the third quarter, but it has happened in the second quarter itself. Thanks to a very good retail growth. See, our bank is primarily retail focused. So there has been a very good, in spite of all that has happened in Jammu and Kashmir, there has been a very good growth in agri as well as retail. The entire growth that has happened during the second quarter has happened in agri and retail. So very, very hopeful that going forward that we will be definitely sticking on to the guidance of 12% and definitely going to achieve it. I am happy that what I was expecting to happen in the third quarter has already happened in the second.
Okay. All right. Well, thanks very much for joining. And just wanted to elaborate a little bit in terms of the point on loan growth, Amitav. Because in the previous quarter, the rest of India portfolio for you all declined when it came to loans. So just give us a sense in terms of what the breakup is looking like for you all this quarter.
Obviously, I had also mentioned that our focus will be better loan growth in the rest of India portfolio. For obvious reasons, the scenario has not been very good for loan growth in Jammu and Kashmir for this financial year so far because of all that has happened, the floods and the April 22 episode. So we had been focusing on the rest of India, and I'm very happy to share that rest of India retail has picked up substantially during this quarter. If I have to mention the percentage of growth, obviously, since we had initially in the first quarter we had a very good agri growth in J&K. The rest of the growth in the second quarter has come from rest of India. I must say, if I break it up first quarter and second quarter. First quarter growth had happened in J&K. Second quarter, almost entire growth has happened from rest of India. So this is what we were planning to do, and it is happening. I'm very happy about it.
Okay, so rest of India is positive. It's contributed majority to that 9% loan growth that you've seen. But J&K has also been positive, or has it been degrowth this time?
Not at all. J&K has also been positive.
Okay, so you've recovered on both aspects.
Yes.
All right. Your net interest margin guidance for the entire year stood at around 3.65%. What exactly is the cost of funds, and how are you placed in terms of achieving that?
I can say that as things have gone on and the kind of yields that the large corporates are demanding, the rate of interest that they are demanding, it will be pretty tough for us. But then in the first quarter, we managed to retain a margin of 3.7 plus. So I am very hopeful that we will be able to maintain. Of course, there are other factors. We have been rationalizing the interest rate structure for J&K as well.
Right.
So there will be some kind of pressure. Cost of funds have been a little high because the deposit growth that has happened during this year primarily has happened in the fixed deposits, the term deposit portfolio. CASA from last quarter has improved a little bit, but then major growth has come from the term deposit, but retail term deposit, which is again a good sign. So there has been a little bit of pressure on the cost of funds, but I am very hopeful that we will be able to maintain the margins above 3.6, if not a little bit more.
All right, above 3.6%. What about the CASA itself? You said that it's seen an improvement from the last quarter, but at the same time, your target was 48% plus. Do you think that will be difficult in the current environment?
I feel so. The guidance is 48%, but how the things have moved on in the first two quarters. First quarter was a very bad quarter as far as CASA was concerned. We had a degrowth, but fortunately, we had a growth in CASA in the second quarter. We have taken certain steps, quite a few steps for that matter. So it is showing results. I hope the focus on CASA will remain. We are opening more accounts in rest of India, which we had not done earlier. So that actually is adding to a better show in CASA as far as the second quarter is concerned.
Running out of time, Mr. Chatterjee, let's wrap this conversation quickly with the word on the asset quality. You started by saying all that has happened in J&K and Ladakh. Do you think that will have any sort of impact on your asset quality, or you're sanguine on the guidance that you've given with regards to GNPA and net NPA?
I can only say the provisional figures that I have. The NPA has further gone down. The NPA percentage from March. So definitely we are holding on.
So you're sticking to your guidance of below 3% for the fiscal for gross NPAs?
The guidance is below 3% for the year.
Yes.
At the moment, we are slightly above that.
So you're sticking to your guidance of below 3%?
Absolutely, absolutely.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in. So still sticking to that credit growth of around 12%, gross NPA below 3%, and net interest margins of around 3.65% for the entire fiscal FY26. That's what J&K Bank is aiming for. That stock just about holding with a gain of around 0.19%. We'll take a short break, but up next, Achutana Uttekar will join in to discuss technicals. Stay tuned. Welcome back. Well, for the markets, it's quiet, so let's go across to Mangalam. He's at the F&O desk to tell us what he's tracking on the F&O space. Mangalam, over to you.
So if you look at the frontline index, it's been supported by the Nifty Bank, though the Nifty IT is slightly absent in today's up move. So the Nifty IT is marginally in the red. The banking index is supporting the frontline index, and ahead of weekly options expiry, it will be very interesting to see what the third leg of the market does, which is Reliance. Reliance has been holding up through the course of today's trading session, though marginally off the highs. So where does this stock go from here on will determine the course of where the Nifty goes from here in absence of the IT index's support. And the way the positioning for the market is right now, we've seen a lot of action at the 25-200 call and the 25-100 put, telling you that 20 points above 25-200 and 20 points below 25-100 would be the range for the frontline index. And at the same time, if you look at options straddle writers, which is basically a call and a put together, 25-150 is most active today. So look at the 25-150 put, premium of 41 rupees. The 25-150 call as well comes up for you, a premium of 40-41 odd rupees as well. So for a net of around 70-75 rupees, the option writers are expecting a range of 25.80 at the lower level to about 25.220 at the higher level, and that's the broad range that the street is working with as far as today is concerned. A lot of individual stocks are on our radar. Short covering is what we've seen on Geo Financial as well as CDSL. A lot of long positions added on names like IGL, Cainstech and Uno Minda. And finally, watch out for a bunch of stocks which are hovering a lot above that market-wide position limit ceiling beyond which they could enter F&O band. So there's Samman Capital, HFCL, SAIL as well as Idea. So Vodafone Idea is the one that we'll be watching out for. These are stocks which may, if not today, then in the next few days enter F&O band.
Okay, all right, Mangalam, thanks very much for that. Well, we have Sachidanand Uttekar joining in to discuss the technicals of the market. Sachidanand, welcome to the show. Well, it's definitely a quiet day today. We do have the Bank Nifty, however, which is picking up now. What's your sense in terms of the overall texture?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly the market trend has been very robust. We have already seen a 600-point strong rally since last Tuesday. The floor was very well set at 24,600, and from there we have seen a very strong sequence of higher tops and higher bottoms in place. But if you look at the placement of the averages, especially on the Nifty, the price action has been far away from the short-term averages. If you look at the 5-day exponential moving average itself, it is placed somewhere close to around 24,970. There's a cluster of moving averages which are placed near that particular area, and that's why we believe that if you look at today's data, there is a very low probability of a Nifty scaling higher towards the 25,200 mark. On the lower side, 25,100 also looks like a decent support for the day. But if you look at the rally for the last 5 trading sessions, we are seeing some signs of consolidation ahead of the next leg of move. So we are expecting the Nifty to display a consolidation within this particular range of 25,050 on the lower side to 25,150 on the higher side. So we may see further slippages during the day. And I think that will provide a good opportunity to create some long positions. So the overall strategy on the Nifty remains buy on declines, and hence we are expecting that a pullback would give another opportunity to create some long positions. An ideal level wherein some long bets can be placed is somewhere close to 25,080 on the spot. And we are expecting that the Nifty would scale higher towards 25,350, 500 kind of a zone in the next couple of weeks. So I think the major trend for the Nifty remains positive, but for the day at least, we are expecting some pullback towards 25,100. So.
Okay, and what are the stocks that you'd be looking at?
Well, the 4 stock that we have recommended to our clients is, Blue Star. If you look at the overall performance in the last few trading sessions, we have seen a good consolidating range. Now, if you look at the daily scale in detail, it looks like a broadening pattern formation with a base at around 1870. It's 5 and 50, day exponential moving averages were also placed near this particular cluster. And we have seen a positive crossover on its RSI. So along with the 5 and 20 exponential moving average crossover, which is a good sign of momentum. So we are expecting a quick move towards the upper end of this particular pattern, which is placed at
Which is the stock that you're referring to?
Ekta, we are talking about Blue Star.
Blue Star.
stock which we have recommended to our clients. So from a trading perspective, one can keep a stop loss at 1898 on closing basis. And eventually we see a rally towards 2060 levels. The other stock which we have recommended to our clients is Bajaj Auto. Now, after a steady decline, what we have observed is a bullish hammer formation on its weekly scale. Now, this particular pattern has also occurred near the 50-week exponential moving average support. Now, if you look at the daily scale, it looks like a declining wedge formation which has already matured, and we are expecting a very strong rally back towards 9200 levels. So we are recommending buying, in this particular counter. One can keep a stop loss at 8830 on closing basis and accumulate Bajaj Auto for a swing target of around 9200.
Okay, all right. We're going to let you go on that note. Thanks very much for joining in and speaking with us. Well, we need to take a short break on that note. Lots more on the other side. We're in fact going to be covering Fortis Healthcare. There's a JP Morgan report with regards to the IHH open offer. So more on that once we're back. Stay tuned. Welcome back. You're still tuned into Halftime Report this afternoon. Well, just want to talk about Fortis. Remember that it's been in focus because SEBI has now given the nod for that open offer, which has been pending since 2018. Now, there have been a lot of questions with regards to it, and we do have some clarity now, interestingly, because there is a JP Morgan report. In fact, JP Morgan had hosted the group CFO of IHH. And what they have said is that the open offer, in fact, is a reinstatement of an existing proposal and is not a new one. IHH's immediate priority is to complete the mandatory tender offer process, which is expected to conclude within approximately 60 days. It does not require shareholder approval. In the event that there are no shares tendered, IHH remains committed to increasing its current 31.15% stake. IHH remains committed to increasing its stake in the medium to long term to 50% in Fortis. Now, they will consider options such as creeping acquisitions, preferential allotment, other capital market routes as well. IHH has indicated that their balance sheet is robust and it provides capacity for disciplined expansion. Gleneagles India has a management services agreement with Fortis separately, and a potential merger would be evaluated at an appropriate time between Gleneagles and Fortis as well. So those are some interesting takeaways. JP Morgan says they view this as a major regulatory overhang which is removed. It restores strategic flexibility, repositions the group for structural earnings upside, and IHH and Fortis remain top sector picks for them. So the key conclusion being that the open offer is currently just a reinstatement of an existing proposal and not a new one. But they remain committed to increase their stake to 50%. We'll take a short break, but up next we'll connect with the management of Canara HSBC Life Insurance as its 2,516 crore IPO opens on 10th of October.
Welcome back. HDFC Bank at the high point of trade, and the market's picking some pace right now. Important news from the bottom of your screens. Reuters says that JLR has restarted manufacturing and introduced some new products. In fact, the phase-wise manufacturing for their plants will start from October 8th, which is starting tomorrow. Phased restart of Jaguar Land Rover manufacturing operations at EPMC, both in West Midland, UK, on October 8th begins. So that should be positive, though currently the stock lower in today's trading session. But we have a bunch of IPOs, 3 this week itself, and Canara HSBC Life Insurance's near 2,500 crore rupee IPO opens towards the end of this week for subscription on October 10th. The price band between 100 and 106 rupees. Yash caught up with Anuj Mathur, who's the MD and CEO of the company, and started speaking about the IPO and the prospects of the business going forward.
It is an OFS, and see, now we are in our 18th year of business. The company has matured. We are doing very well in terms of all financial metrics. So I think this is the right time to have wider participation, and I think shareholders have decided to kind of go for wider participation. It's always good. Yeah.
Correct. Now, just to have some clarity in terms of shareholder pre and post IPO.
Yeah.
Which are the shareholders who would be tendering in their shares through the IPO? How much? And what would the post-IPO shareholding look like?
Right. So in this, it's about 25% of the company's capital, which is available for the investors. Canara Bank currently is at 51%. They are diluting 14.5%. So with that, their stake will come down to 36.5%. Punjab National Bank, currently they're holding 23%. They are diluting 10%. So their shareholding will come down to 13%. And HSBC is having 26%. They are diluting only 0.5%. So it comes down to 25.5%. Both Canara and HSBC, they are the promoters. And Punjab National Bank is investor in the company.
Okay.
So this is how the shareholding will be post-listing.
Okay. Now, one question in terms of the valuation comparison itself, right? On one hand, in the sector, in the listed space, we have LIC, which trades at about 0.6, 0.65 times forward price to embedded value. On the other hand, we have private players like HDFC Life, Max Financial Services, who trade anywhere between about 3 to 4, 3.5, 3.8 times forward price to embedded value. For you, where do you value yourself with this IPO? And the rationale, what was the thinking behind it?
So first of all, the valuation will appear after listing. But this process which we ran for last few weeks, through the big book building process, the price band has been arrived at. So that's something which we think is a fair value. And I think the valuation will be after listing.
Correct. But I mean, the IPO valuation itself, after listing, of course, the market will assign a valuation to the company. But with the price band and the embedded value, the last declared embedded value that you have, what is the valuation right now?
So again, it's there in the offer document. Our embedded value as of 30th of June 2025 is around 6,350 crores. So basis that, the price band has been arrived at, and basis the demand. So that's
okay. Okay. Now, let me understand the product mix a little between ULIP, endowment, term. What is the product mix that you have? And importantly, that product mix, a result of that, what is the VNB margin that you're deriving?
Right. So Yash, as a company, we have been more of traditional, selling more of traditional products. That's because of our customer profile. Last year was an aberration, wherein the markets actually were delivering very good returns. So I think there was demand which came for unit linked, and we saw across the industry that the demand for unit linked went up. So last year, I'll say, was more of an aberration. If I look at our UL composition, it went above 50%.
Correct.
But typically in the past, our traditional products have been in the range of 55 to 60%.
Okay.
And I think that is what I'll say as the ideal state for us, because looking
traditional
at
55 to 60%, and ULIP and term, how much?
So ULIP, because again there is a demand, I think our ULIP should be in the range of about 45% or so.
Okay.
And term portfolio, we expect, in fact, there are two areas where we see good growth coming in. One is pure protection, and the GST is going to help there a lot. The other is the retirement segment, where again we see good demand coming in for retirement products, and that's where we feel the growth will come from. And these are typically traditional products.
Okay. You said, of course, last year, the ULIP segment, the demand was much higher. The share went above 50%. The first 6 months of FY26, what has been the share? Has it come down from that higher than 50% to what point?
Yes, it has come down, and you will see that in the public data, which will be visible now once the numbers are published by the industry council. So yes, there is a decline.
Okay. Now let's speak about the growth as well as margins. Last year, what is the kind of growth that you've been doing over the last 3 to 5 years in terms of premiums? How have the margins trended for you, and where do they stand as per the latest disclosure? And what is, do you see further improvement happening in margins from here?
Yeah, so first of all, as far as overall product mix is concerned, we talked about that. So I feel that margins are current, if I talk about the past, For the last 3 years, if I talk about the growth first, so our growth has been in the range of about 17%.
Okay.
This I'm talking about WPI, compounded annualized growth rate. So we have been growing by around 17%, whereas if you look at the industry has grown in the range of about 10 to 11%.
Correct.
Yeah. So that is in terms of growth. So as a business, we are doing very well. The bank insurance model which we have is very, very superior model where you have access to the customers and you are able to price products very, very competitively. You are able to offer products to the customers. So we have seen good growth in terms of our premium income. When it comes to margin, and margin is also, VNB margin is also a factor of the vintage.
Correct.
For how long the company has been in existence. So we started our business in 2008, June 2008, 17 years. And if I talk about our margins, in FY24, our VNB margin was 20%.
Okay.
In FY25, slight change because of the UL mix, it was around 19%. And recently also, we have seen our VNB margin is in that range.
Okay.
So that's how it is.
Welcome back. Well, for the markets, it's holding up steady. So 25,160 is currently where the Nifty is at. We have the mid-cap index, which is up around 0.3% as well. Just look at Vodafone Idea. That one is doing very well today. So that stock is up around 7.5%. It's not done too badly for the year as well. It's gained around 14%. South Indian Bank too is up around 3.8%. And a couple of these pharmaceutical stocks such as Divi's, Newland, both those counters are up anywhere between 3 to 4% at this point in time. So overall, it's a lively market, you'd have to say, for specific stocks. But overall, we could be wanting a little more in terms of the advanced decline ratio, which is actually now expanded and favoring the declining stocks more than the advancing stocks. So that gap seems to be widening as the day goes along. Well, on that note, it's a wrap on the show, but stay tuned. Business Lunch will take all the action forward.